We have a great guest today, Dave Landry, who's someone I've known for a number of years, and so excited that he will be joining StockCharts TV with a show called Trading Simplified. And Dave, thanks again for joining us. Dying to get a sense of where you're going to take your time with us on StockCharts TV.
Oh, thank you so much. Glad to be here, and I'm very excited to be joining StockCharts. When they asked me what I wanted to call a show, I thought for a little while. I was like, well, I want to talk about how trading doesn't have to be so complex and that you need to keep it simple and all these things. And then I realized that I had trademarked Trading Simplified, and I thought that might be a good name for the show. And I think that we all tend to make trading a little bit more complicated than we have to do. And trading isn't easy, but it's far from as difficult as many try to make it. Now, one thing I want to point out is it's not my way or the highway. There are many types, many styles of trading. This is just the best thing I've found after many years of grail hunting. I think we all go through a bit of a grail hunt early in the process. And I think the true enlightenment comes when you get out of that grail hunting and just find something simple and stick with it. It's conceptually correct based on the psychology of the market's participants, and I'll touch upon that in just a few seconds. And also, I believe that regardless of your trading level, whether you're just getting started or you've been trading for a very long time, there's a piece of what I do that might help what you do become even better. I was working with, as I discussed at the conference in San Francisco, I was working with a hedge fund years ago, and he was impressed with the way I was doing certain little things where I thought everyone did, just very simple things. So a lot of that will come out in the show. Now, I'm not holier than thou, meaning that I get frustrated with the markets too. There's a lot of psychological issues, and Dave Keller, don't you chime in on those. But like everyone, I have a pulse, and just because I started trading doesn't mean I no longer have a pulse. So I get a little emotional in my trading here and there, and that's one reason that I spend a lot of time talking a lot about trading psychology, and nor do I claim to be the grand poobah. And as I often say, no one knows exactly what a market will do, not you, not me, and certainly not the guy who screams on TV. Now, everybody's mostly excited about a methodology, and everybody's a bit of a setup junkie, and money management and mind or trading psychology tend to come down the road. In reality, we really need to flip that script and talk mostly about trading psychology and then money management and methodology. It's not exactly mechanical. You will have to learn some things and all, but that's fairly mechanical in the general scheme of things. I think if you can get your attitude right, then the others will fall into place. Now, you have to approach all this holistically. And when they first asked me to do the show, I assumed that they just wanted me to talk about charts. And I said, I do talk a lot about money management and psychology. And they said, that's great, Dave, whatever you think they need to know. And so I was really excited. And that's one reason I accepted doing the show. But all three are intertwined, and no pun intended, but the way to look at that is like a three-stranded cord. And the great thing is about this is if you get better at one, you get better at all. And I can give you so many examples, but just a couple real quick. Let's say you got your money management right and you're only trading at a small size. Well, then any individual loss is not going to affect your psyche. And if you're in a proper mood, then you're more likely to follow your methodology. Last week, as I said earlier, we had a big winner on one day. And if I'd have been in the wrong mindset, I would have completely missed that trade if I'd have been frustrated at some trades past or whatever it might be. Now, the bottom line is to profit from a trade, any trade, you just have to catch a price move. I know, easier said than done. But because of that, I'm going to focus on price and only on price. As I just said, I'm going to ignore all the news except in maybe a rare case where I won't trade on the Fed day because I might be trying to implement a short-term strategy in Forex. But as far as my core methodology, what I'm going to mostly teach here at StockCharts.com, I'm going to completely ignore the news and focus on price and only price. And in fact, I don't even use volume in my analysis. And other than the occasional moving average, I don't use any indicators whatsoever. Now, in that technical analysis, again, I'm just going to use price, and I'm going to simplify that. Now, my methodology is simple, it's repeatable. I did a webinar a while back, and I talked about repeatability. And after the webinar, the host called me up and said, Dave, let's talk about this repeatability thing. And I just kind of said it in passing, and I didn't realize it was that big of a deal. But the more I thought about it, the more I realized how important repeatability is. And I'll just give you a quick story. Years ago, I was involved with a website, and there was a day trader, and he was putting out signals. And by the time the clients were taking the signals, he was already getting out. And a lot of clients got really frustrated really fast. Now, what he was doing was not disingenuous, I don't think. I think it's just the way it shook out. So everything I do, you should be able to repeat, whether you're following me directly or if you're just following the methodology in general and doing everything on your own. This is the open portfolio, and today we have two setups coming into today. And these setups, as you can see, were from last week. And then last week we have one here that triggered. This is the big winner from last week. It was on a recommended list for an entire week. I remember putting in orders day after day after day, thinking this thing will never trigger. So with my methodology, you should be able to repeat it. Everything is fully disclosed. I know some great people doing great things with proprietary indicators, but two things. One, if you don't fully understand how the indicator works, or two, if they die, then what's going to happen to your trading? So I would push you towards following someone who is fully disclosed. It doesn't have to be me, but in my case, everything I do is fully disclosed. Now, in a nutshell, if you think about technical analysis is reading the mindset of the market's participants, or reading the emotions of the market's participants, while at the same time embracing your own. And the reason technical analysis works is because the market participants often behave in an irrational manner. Yogi Berra once said, if the world were perfect, it wouldn't be. Well, if markets were perfect, they wouldn't exist. Now, everything that I do, there's a psychology behind the setup. So in making the methodology simplified, I believe that when you're describing a methodology, you should be able to put it on a cocktail napkin. And before my presentation I did last week at San Francisco, I got the crazy idea to make a cocktail napkin with my entire methodology. And that's pretty much it. Now, in the show, I'm going to talk about how to identify and stay with trends. And there are some very simple little tools. Like I said, other than the occasional moving average, I don't use any indicators whatsoever. But a moving average occasionally can be very helpful. There's a concept I'm going to use called Landry light, where the lows are greater than the moving average in uptrends, and then the highs are less than the moving average in downtrends. So when you see people like me and others present, and there's a moving average on the charts, check it out and see if that simple concept would keep you on the right side of the markets. Now, I have very simple setups that I'm going to use and show you exactly what I'm doing. And here's one of them here. This is what I call a trend knockout, where we're looking for a sharp sell-off after a strong trend, and that knocks out the nervous longs, and it also sucks in some eager shorts. Now, the other thing I want to do is anyone can show you trades in hindsight. In the show, I'm going to often show you what we're trading and why, and show you the setups. And then I'm going to show you everything, warts and all. So here's a trade right here. This is a gold trade that we're in. This is AUY. And it triggered, and it hasn't gotten to the initial profit target. It hasn't stopped out either. But right now, the trade is underwater. And if we have time later in the show, we'll go through the rest of the portfolio. Now, I'm going to show you some ridiculously simple setups in IPOs. And again, all I'm using is price and the occasional moving average. In this particular case, we're just using a closing high and a 5-day moving average, and that's it. And I'm often amazed that this stuff can actually work because it is so simple. In general, the methodology trades on a pullback. Here's another IPO. This is actually an open trade. And you can see that it had a nice little uptrend, and then it triggered an entry. And then the money management, of course, which is crucial. We had a buy point, initial profit target, and a trailing stop in order to stay with that trend. I'm also going to get into market timing. This is the S&P 500. If you just look at the Landry light, meaning that the lows, again, are greater than the moving average, you could see that you would have stayed long for a long, long time. You would have gotten out of the way or short back in December. And then once again, you would be mostly long ever since. If you take a look at what that looks like on a longer term chart, you can see just using this one concept in and of itself will help to keep you on the right side of the market. And we're going to flesh all this out in a lot of detail. I'm also going to show you, easy for me to say, a simple system that uses the concept of daylight, and it beats buy and hold. And more importantly, it avoids extremely big drawdown. So this is one little piece of the puzzle that'll help us time the market. Again, money management is crucial, and I believe that money management will cure a multitude of sins. If you're doing the right thing and following the correct money management, no individual trade is going to take you out of the business or destroy you from a psychological perspective. Now, one of the things that I've found over the years is the secret sauce to capturing big winners, and that's just using a ever-widening trailing stop, and then, of course, taking profits just in case you are right small, but being willing to stay with that position if you're right big. And I'll show you how to do that. That's one way to have your cake and eat it too. I think short-term trading is a great thing. Unfortunately, you don't make enough money and the risks are too big because the occasional black swan move can still occur. But the real money, again, is in longer-term trading. So these short-term trades, these swing trades, I'm slotted as a swing trader, and all my setups are based on a swing trade pattern. But I also want to be in that trade for a long, long time. And that might be 2 years or more. And that doesn't happen often, but occasionally does. And so I keep a piece of that on just in case that longer term trend continues. And that's where the real money is. Now, the psychology, I think, is the biggest piece when it comes to trading. And it's very important to get your psychology correct. And you got to realize that many times you're going to be your own worst enemy. And we're going to dig into that on a deep level. A while back, I decided I was going to write a course on trading psychology. And I'm sort of making my to-do list. I thought I could bang it out about a month or so. And I ended up within about 2 weeks, I had a list of what I wanted to cover, and it was 14 pages long. So there's quite a bit. But the bottom line is we're not made to trade both on a psychological level and on a physiological level. The same things that are keeping you alive and helping you function as a successful human being can often go against you. So we're going to talk a lot about that, how that the trading world and the real world, it's two completely different worlds, why it feels unnatural. And that's the biggest thing for me. It took me years to realize that, hey, it's supposed to feel unnatural because what we're doing is not a natural thing. And we might even delve a little bit into the neurology of why this all occurs. And the more you learn about all this, the more you feel normal in your trading. So we're going to talk about that and decisions and how they're all connected with emotions, that you can't eliminate your emotions, but you can learn to embrace them. The bottom line is what you're feeling is what makes you profitable. So if you're able to embrace your own emotions and let others be emotional in the market, that's what makes you profitable. And believe it or not, that's technical analysis, reading those emotions of those others. So the bottom line is we're trading traders, not markets. And one thing that if you could do to be successful, it's a little cliche, but if you could pick the best, leave the rest, plan your trade your plan, and then after you do all that, do a post-mortem to make sure you did follow the process, you'll be very successful. And we're going to dissect all of these in the show. The other thing I'm going to do is I'm working on a new studio, and so hopefully this will allow us to live stream and do some really fun things live, but that's going to be down the road and something that I'm pretty excited about. And last but not least is you. So if you want to see something in the show, please let me know, and then we'll have some open segments where we can take a look at your stock picks, answer your questions, and so on and so forth. The bottom line is trading is far from easy, but it's not nearly as difficult as many try to make it. So join me to make trading simplified. That's the show.
That's fantastic, Dave. I was taking notes as you were talking, and I'm happy to report I've got about 8 pages of things that I would love to ask you about. Just to start with, at the very end, you talked about a post-mortem, right? So you talked about planning things out, trading, and then the post-mortem, and then rinse and repeat and kind of cycle it back. Can you talk a little bit more, just what does your post-mortem look like? So if you had a trade you were reviewing, how would you kind of approach that? What constitutes that review for you?
Well, that's a great question. And that came up, and that's one of those things and that's why I love to teach, is like I'm asked to flesh out things that I might not think about or think about enough. And I think the answer there is, if you truly know your methodology, the post-mortem should be pretty easy. And what I do is I just back the chart out to the day of the trade, and I look at it, and I kind of try to imagine best I can, like time traveling, and say, okay, I'm just seeing this trade for the first time. Should I have taken this trade? And obviously you're going to see it with a lot more clarity, of course, in hindsight, because you know the outcome. But you need to look at it and honestly ask yourself, it's like, boy, this stock was trending, it was persisting higher, it was accelerating higher. I had my setup like that TKO, for instance, mentioned earlier. It was a nice wide range bar down. The stock in general, again, didn't look like an electrocardiogram and all over the place. All these pieces fit. Then you need to pat yourself on the back if and only if you followed your plan, regardless of the plan. Like I said, in San Francisco, outcomes are noisy, and sometimes bad trades have good outcomes and good trades have bad outcomes. And if you could figure out how to wrap your head around that and separate the luck from skill, you'll be incredibly successful. And I think that we could dissect these things and go back to the original trades and take a look at them. And then if possible, we can maybe interact with the StockCharts viewers, and we'll take a look at the trades ahead of time. So I call that like a pre-mortem, like, okay, make sure we definitely do have the best trade going in.
Yeah, let's go ahead and lock these things up before death if we could, right? That would be good. But no, listen, I think the interactive nature of StockCharts TV in general has been a fantastic experience, just to allow people to listen and then actually interact with you. It's going to be such a cool feature of the show. I'm really excited for you and for that. When you talked about your own methodology, you keep coming back to the simple nature of it. And you also hit on the fact that it's repeatable, which I want to just touch on really, really briefly, because I've found, I've worked a lot with more quantitative strategists that are really just trying to design mathematically, statistical systems. And the repeatability, the robustness of what they're trying to do becomes a challenge, right? So you have something that looks really good on paper, you actually put it into practice, and then it just completely bombs miserably. So how do you, before, as a pre-mortem exercise, how do you make sure that what you're doing is going to be repeatable or maximize the potential that it is going to be repeatable? How do you think about that?
Well, one thing would be deliberate practice. And I look at about 2,000 charts every day. And if I see a stock that takes off without me, I ask myself, could I and should I have caught that big move? Did I have a pattern there? Is there a new possible pattern there? And I go through all this mental list every time I look at these charts. And over the years, I've learned to be able to look at quite a few charts over a very short period of time. So I think that's a big help right there in knowing what should work and what shouldn't. And then there are plenty of repeatable patterns. So once you begin to see this pattern recur over and over again, for instance, like the trend knockout, I kept noticing there'd be a big wide range down in these really good looking stocks. And then all of a sudden the next day the stock will go straight up again. So it's just a matter of observations. Getting your reps in is vitally important. I often say I've never met an unsuccessful paper trader, and some guy came up to me and he's like, well, I'm unsuccessful. It's like, well, how long have you been trading? He said 2 weeks. It's like, no, that's not how it works, futurists. That's not how any of this works. So give it time. And then, if you have something simple, you can know whether it works or not. Like you talked about earlier, the clients and all, it's like, well, I can't speak for all of them, but I would imagine that in the case, like you said, well, where it doesn't work in real time is that they curve fit to the prior data. And, the future is always going to be different than the past, obviously.
So I think you're right. I think the reps, the experience of trying to do it live, I think you're right. That's where you really start to learn some of the lessons for sure. Can I just pivot just a little bit? And I won't ask you how many years you've been doing this, but I know it's been more than a couple that you've had a great career of just trying to learn these lessons. And the stuff you're sharing comes from, your own experiences. Can you talk just a little bit, how has your approach changed, or maybe more to the point, how has the change in market structures, things like high frequency trading, just the participants, algorithmic trading, all of that, has that affected what you're doing? Or are you finding that the tools you're using now are kind of similar to what you've been using for years, right? Has that changed at all over time?
No, that's a great question, and that's what's exciting for me. And it's somebody pointed out who didn't know me. They went and did a lot of research on the internet, and they found some posts back from the '90s and in the early 2000s. And I was saying the same thing that I'm saying now. The only thing that may have changed a little bit, I'm using the same exact patterns. That TKO, I came up with that probably in 1998, maybe, and it's the same exact pattern. Now, the only thing that I might be doing a little bit differently is a very small tweak. Like, since the markets can be a little bit noisier or a little bit noisier than they were, I'll use a somewhat wider entry as opposed to getting it right above that high. Maybe my stops are slightly looser than they used to be. My trailing stops might be a little bit more liberal than they used to be. But these are very, very minor tweaks. The same patterns that I used way back then, I'm still using today. And a case in point, for instance, like bow ties, another one of my patterns that I discovered back in the 90s. I saw the market roll over in 2000. I saw it roll back up with the pattern in, 2007. We had, roll back over again in 2007. And then the 2002, 2003 bottom, we had another one of those signals. So I find that if you come up with something very simple that's conceptually correct, then it should last for a long, long time, because in general, the human nature never changes. The quants and all this other stuff comes and goes. I remember years ago, there was these spreaders. They were just spreading like crazy on everything. And that was the rage. And those guys have dried up. So just stick with something simple, longer term, and I think you'll do just fine.
You know, it's funny, you shared how, your methodology is simple and repeatable, and those are not mutually exclusive, I think, right? I mean, the more simple that you approach it, by definition, the chance of it being more repeatable, it goes up by a factor of a great amount, right? I mean, because the more complicated, the more steps you have in a process, then the more it's probably not going to apply to some other areas. So I think that those are two really good things to keep in mind. It strikes me, I brought up just on the screen for everyone, a quick candle glance looking at some of the Dow stocks and where they're at over the last year. So with your methodology, which thanks so much for kind of sharing just a simple version of sort of how you think about things and how you'll dig into them, have you found with certain sectors, with certain types of names that approach tends to be better? And the reason why I ask is because, at this point where people are sort of wondering, are we ready to put our foot on the gas with tech and communication services, or is it more lightening up, going more defensive, something like utilities? Is how you think of the market. Does it tend to work across sectors, across market cap styles, or are there certain sectors, like more volatile ones, where it just seems to work better, seems to chart better in your work?
Well, in general, on the upside, I like inefficient markets where the inefficiencies aren't priced, where the efficiency isn't priced in. So the stocks that have a lot of analysts and a lot of people trading them, thick volume, those have the efficiency priced into them. Now, a lot of times they can be priced for perfection, and they could be really good shorts. For instance, I'm short TSCO right now, which has probably tons of analysts and has tons and tons of volume. There are certain sectors that tend to be choppy, as you know, such as the energies, but there are times when the energies, like right now, can make really good moves. So in general, it does work. There are some sectors I'm not a huge fan of because they can be choppy. Educational stocks, which for some reason tend to be really choppy. I've done a lot of mechanical research in the past, and I find that they just don't trend that well, would be a good example of that. But in general, it does work across the board. And I think I think it was John was pointing out, talking about the momentum over the weekend, even some of these value stocks at some point in time can become momentum stocks.
Right. It's, it's interesting. I have the chart of Tractor Supply up, TSCO, which, I mean, congrats so far. That's a good trade at this point for sure.
Thank you.
One of my mentors, John Mendelson, who was at a number of places and longtime technical analyst, he always said, I like trends that I don't need my glasses to see. And if you look at the chart of Tractor Supply, again, I mean, there are so many times I feel like between July, August to now where you could have recognized that the stock is going down, right? And plenty of, great triggers, breaking to new interim lows, breaking down through moving averages, all these breaking through support, all of that. But, so often I feel like people miss the simplest kind of thing. I mean, it's like, take a step back. Is the thing going up or down? It's going down. Should you be long? Probably not, right? So that discussion, that thought process, I think people are going to get from your methodology and your discussions, which is great.
Yeah, you know, one thing I didn't mention earlier, but the net price change is huge. I mean, look at this tractor supply. Look at let's just pick like a level like 108 and go back in time. It's like you go all the way back to May. Yeah. And we really haven't made much forward progress. And then notice in the classical technical analysis, you've got inverted cup and handle, and then some of my patterns, such as bow ties and what I call a first thrust, where you have a big thrust down from the highs. Notice it went from 114 down to 90 and change. And that was a big, you know, that's where the chart becomes broken, pulls back a little bit, and then rolls right back over. And you know, just keep it simple and try not to interject too much logic into the chart.
I love it. We're almost out of time, Dave, but I did want to ask you. You know, it's funny. You and I both have an interest in market psychology, investor psychology, which is why I'm so excited to talk to you today and hear what you're going to share with all the viewers here in the coming weeks and months. But you know, it strikes me when you look at behavioral finance, a lot of times it's all about behavioral biases, right? Like what we do wrong. Here are all the reasons why you make really dumb decisions with your money and with your investments and all this stuff. And it strikes me when you were talking about it in your presentation just now, you had things like embrace your emotions. Like it was much more of a positive thing on there's value in actually paying attention to how you're feeling. How can you just talk a little bit about that? I mean, how should a trader, how should an investor, should they try to, you know, push their emotions completely out of the way and be as robotic as possible? Or is there a human element to what you do that you think has some value?
No, I think you have to embrace your emotions, and I think you have to realize that it's a natural. And then, as I said over the weekend, and I know we keep coming back to that, but it's fresh in my head. I talked about the trading psychology is kind of like peeling the onion, and then you understand, once you understand the neurology involved, you're like, okay, wait a minute, I am prone to make snap decisions, so why don't I just count to 3 before making that trade? You and I were talking about flying a plane and how Greg Morris used to wind the clock to avoid crashing a plane, just to keep those emotions from taking over. And then another thing we talked about was acrasia, meaning that you might do the wrong thing over the short term, but that's going to have long-lasting effects. And you have to recognize when you're going to do that wrong thing to protect yourself from yourself. And sometimes that could be as easy as just turning off your screen so you're not making an unnecessary trade.
Right. It's fun. You know, it's so funny. I always think of it. Someone years ago called looking at the markets too closely, getting caught up in the flickering ticks. And I think you get that idea, right? Where there's an ADD sort of mentality a lot of times, especially on a day like today when a lot of things can move very quickly. And it's so funny. A lot of times just turning the screen off, taking a deep breath, taking a step back, and it's probably could be one of the better things you could do, right? At a tough moment. Yeah,
and absolutely. And like this TSCO, I was watching it earlier, right before the show, and it began to drop, and I found myself getting a little excited about it. And I was like, well, hang on, Dave. What do you want to do? And it's like, well, I want to take some profits. And where do you want to take them? So I just put in an order to take those profits should it hit the profit target. And my screen is literally turned off now with the screensaver went off. So I don't know what's going on. So it's like, if I sat there and watched it, it's like, okay, well, I got 5 points. Maybe it'll go 6, maybe it'll go 7, maybe it'll go 8. And then next thing you know, I've got 2 points, 1 point, and then maybe even losing money on the trade. But if I put an order in place, turn off the screen, go about my life, then if it hits a profit target, so be it. So that's another way to help remove some of those emotions from the screen.
Dave, what you're saying is I totally ruined your mojo by bringing the chart up in front of everyone, so you had to look at it. My bad. I won't do it again.
No, I'm glad to see it's working.
Dave, listen, this has been so cool to have you on the show. And listen, I mean, I can't speak for everyone, but I'm super jazzed to watch your show and to learn from you. I mean, every time I've heard you present, I pick up a couple other things. So listen, thanks again so much for coming on today. We'll look forward to seeing you again coming up soon. Your show launches Wednesdays at noon. It'll start October 2nd. So Dave, thanks again for coming on.
Oh, glad to be here. Thank you so much, David. Looking forward to it all too.
Perfect. Everyone, that was Dave Landry. Dave is going to have a show called Trading Simplified coming up here on StockCharts TV. It's part of the fall lineup that we're unleashing to all of you, not next week, but the week after, starting September 30th. And Dave's show will be every Wednesday at noon Eastern time called Trading Simplified. So put it on your calendar now. It's going to be a really, 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 really cool one to pay attention to.